This interview is a paid advertisement. It was produced on behalf of the company and is considered investor relations activity under Canadian securities law. All statements and opinions are those of the guest and should not be construed as investment advice. Please do your own due diligence or consult a registered investment advisor.
Hello and welcome to the Gold Newsletter. My name is Kai Hoffman. I'm the JR mining guy over on X. And together with our good friend Brian London, I'm the host of the Gold Newsletter channel. And I'm really looking forward to this breaking news update. I'll be joined in a few short seconds by Tara Christie. She's the president and CEO over at Banyan Gold. And the company just released a new resource update. Why are we so excited about it? Well, the ounces increased, of course, but it's also in a higher confidence category. It's indicated, and one thing that caught my eyes, of course, the grade. That's always been not cause of concern, but it's been a point of discussion, and the company's been putting out higher grade results, but also it's now being reflected in the resource, which is really, really important to highlight, because as you know, if you're starting to build a mine, you want a higher grade to get the IRR up and the return on investment to increase. So really, really important, and I'm looking forward to catching up with Tara in a few short seconds. But first, hit that like and subscribe button. It helps us out tremendously, and we much, much appreciate it. Thank you so much for doing that. Now, Tara, thank you so much for joining us. It's good to see you again. Congrats on the new resource.
Thank you very much. We're pretty pleased with this resource. You know, our goals for last year were to get 2 million in indicated, improve our geological model, and I think we've done that, and add high grade and near surface high grade. So, and it's reflected in the resource. You know, it's a big resource, 2.2 million ounces in indicated at 0.63, another 3.54 million in inferred. So it did grow modestly from the last resource. We only had 21,000 meters added to this resource for the for this update. But what's quite important when you look at the cutoff at a 0.55 is what's happened internally within the resource. There we have 1.4 million ounces at 0.95 and an additional 3.1 million ounces at 0.98. So a very significant to have that many ounces of around a gram that hold together in a Prit-constrained deposit.
Yeah, excellent results there. Like, run us a bit through like how and where is the deposit modeled right now? Like the locations, Ormac, Airstrip, power line. Like, how is it distributed?
So still the majority of the resource is at power line. And that's simply because we've drilled more there. Last year was the first time we got back to drilling at the Airstrip deposit. If you recall, we hadn't drilled on that since 2020. And last year, in the last holes that we drilled, we really, made a discovery where we intersected the dike with the Hornfels material. And we had 16 meters of 9.32 just at 65 meters depth, so near surface. We knew that we could trace that east-west across the project, and in fact drill the up-dip part, which previously we hadn't drilled. So even more near surface. So we're really excited about that. Will be additive to a starter pit. We only had the one hole last year that then got into this resource. And you probably saw our results in the last couple of weeks where we had some more high grade intercepts, both stepping east and west there, as well as to the north. So we think that this is a stepping stone, this resource. We're demonstrating we've got this high-grade core with a significant amount of 1 ounce material in it. But we also know that we're going to add with the 30,000 meters that we're drilling this year.
Yeah, I was really excited when I saw the press release about, what was the date here? June 25th, 38 meters of 3.95 grams. I just knew that the resource might be higher grade as well, which is really, really exciting, of course. And fantastic result, right? I was going to talk about like adding ounces, like adding confidence, and you of course you mentioned your goal was 2 million indicated. Run us a bit through the process now, like what increasing the level of confidence of the other ounces, of the remaining ounces, and the conversion percentage.
So we were really pleased. When you convert from inferred to indicated, you lose ounces or tons in grade. We were really excited with the very high conversion rate that we had here moving to indicated. We got 2.2 million ounces of indicated, and we drilled off some higher grade areas. And what's nice about the new geological model is we've really refined it to base it more on lithology and geochemistry, which I think is going to give people more confidence in this resource. Of course, an indicated resource already does that, but the geological model and showing how well it corresponds with the geology is a real key thing. And I think that'll give us lots of credibility as we move forward. And it means we understand how the high grade is hosted and where we can follow it. And we're seeing some really consistent high grade trends, many of them right on surface. In this year's program, we're focused on about 50% of our holes this year have been on Airstrip, because obviously high grade, there's lots of areas to add ounces and expand the deposit there, as well as power line, where we've drilled about 40% of our holes, following up on some of those high grade trends. We know both of these deposits are open, and we know it's open between Airstrip and power line. We had one strip of holes that connected them last year, and we know that we actually intersected one very high grade hole in there. So we think there's another high grade trend that goes east and west through there. So, it's a pretty exciting year for us. We have too many targets. In addition to that, we've allocated 10% of our exploration budget to greenfields exploration and some of the geophysical targets that we identified through last year's ZTEM survey.
Before we get too far, I want to talk about more exploration here in a second, Tara, but just coming back to the resource, can you run us a bit through the technical assumptions? Because I'm just looking at like 2050 US per ounce of gold assumed. It's fairly conservative given the current gold price environment. Run us a bit through some of the assumptions, recoveries and things without getting too technical, but just to frame it for us.
Yeah, so we wanted to increase the gold price from the 1800 that we used in the previous to 2050. We changed the recoveries because we have new metallurgical data showing that a 90% recovery and that it's a mill project are more that's more appropriate. So of course, then the operating costs had to go up, then the G&A, et cetera. So, we tried to be conservative because we wanted people to see that, yes, with increased gold price, you do get lots of benefits, but we also wanted people to be able to compare apples to apples. And that's partly why we use the 0.3 cutoff again, because then people can say, okay, they had this before and now this. But when you look at the cutoff grades, that's when really you can start to see how robust and how the high grade really holds together. Because as you increase the cutoff, I gave the example of 0.55, but you could also look at how many ounces are left in a pit constrained deposit if you went even to a 1 gram cutoff. And I think that really shows that some of these high grade zones are very contiguous. And that's what we're seeing in our geological model. And that's partly what we've based our drill program on for this year. So I think that will bode well for us as we're moving towards our first PEA with this updated resource, and we might even be able to update the resource again before we do that PEA, because I think it's the economics, it's this high grade that's really going to drive that.
Yeah, I mentioned the drill result from June 25th. I think you really want to include that in an updated resource before you do the PEA, because the grade of almost 4 grams per ton is fantastic.
Well, we have another 70 holes that have already been drilled, so we'd like to get as many of those in as possible as well.
Yeah, it makes sense if you see those grades continuing, of course, right? But maybe just to summarize a bit of the exploration plan for this year, Tara. Like, we haven't had a chance to chat since April there, since you announced the plans. 30,000 meters in total. You touched on it. 10% is going to sort of wildcat drilling, but run us a bit through like how much is going to resource growth versus confidence. Can you break that down for us?
Well, we actually evaluate our drill program in the middle of our season. So we're at 18,000 meters. So we're doing that right now to evaluate what we think we're going to get out of it based on what we've drilled, because you can see these veins in the particularly at power line in the core. So the allocation that I said before, 50% airstrip, 40% at power line, 10% wildcat. Airstrip, you get a little bit of both. You need a slightly tighter spacing to get indicated at airstrip, so it'll be a mix with probably 50% resource growth, 50% to indicated. Power line, we really have the opportunity to add high grade because we've got the pit there, both at depth underneath the pit in some areas where there's some key ridges. So a lot of that will probably be inferred because just the spacing that's there and the opportunity to get it already in the known pit or in a starter pit. So we've optimized things based on how are we going to get the most economic value, as well as indicated and inferred. And we reevaluate that as we get our drill holes in. We've taken what we've got so far and what we think we see in the core, and we've rejigged what we think we're going to get out of it. And we spend a bit of time modeling it. We have our external consultant, Henry Marsden, who's ex-Yamana, looking at it again, and then we will put out the next phase of our drill program here after we do that analysis, because you can't just like have a static program and think that, just go drill it. I think that's we've got the real world tools right now, or real time. We've got a new logging system that we implemented, along with a server system where our data, our logging actually ends up getting uploaded every day and goes into the modeling software. As soon as we get the assays, they go into the modeling software. So I think that's going to make our targeting and what we're going to deliver from our drilling even better than it was before.
Fantastic. Really excited to see more come out, of course. How do your expectations and market expectations align, Tara?
Well, the markets is tough. Your expectations, my expectations for my team and our drilling is that we really optimize every drill dollar, and we focus on adding value by focusing on that high grade, a little bit more adding ounces, and make sure we're not overlooking key things. So I think our team does that very, very well. We like to be credible, so sometimes the market doesn't always appreciate things until you get out there and you communicate it and you say enough times what it is you have. Market expectations, I think the key thing we have to change is that perception on grade. And I think that's something that this resource will do when people dig into it and look at some of those higher cutoff. How does it hang together? And as we move towards our PEA, which I think will show that some maiden economics are really what we're going to need to change some of that perspective, along with a whole bunch more high grade drill results through the fall and into 2026.
Tara, you mentioned the PEA, and you mentioned mill scenario. Can you just, since I have you, Tara, can you just elaborate on what's going on, like in your mind, like what do you have sketched out, like without running us through like internal economics or anything, but what kind of scenarios are you looking at right now that you're trying to sort of backfill now with the drilling and exploration you're doing?
So yeah, both the drilling, the exploration, and the metallurgical work. And so at the end of last year, if you recall, we had two very viable options, gravity CIL, where we had 90, even slightly higher recoveries on that on a fairly coarse grind, along with the gravity component, and then gravity flotation, where again we had 86 to 87, 88% recoveries from the various deposits. So we're looking at both of those scenarios, and we're looking at both phased versus what is the optimal according to MPV and IRR scenario. And that's a challenge for any junior. Do you do a phased approach like some other companies have very successfully done, where you build it and then you grow, or do you simply put out the scenario in your PEA, which is the highest MPV and the best IRR? And it is just a PEA. So again, any study when you're still moving a project forward is a stepping stone. So we're looking at all of those options and evaluating them. And as we continue to get more drill results, that feeds into it. And it certainly it gives us no shortage of things to look at and do. It's pretty exciting, actually. I love that part of it.
I can imagine. Yeah, of course, getting to model your own 7.7 million ounce deposit and how that will turn into a mine, because you already made some pit slope assumptions and things like recovery assumptions in the resource. So you must have an internal at least plan of what the economics could look like, of course, as well. Really, really interesting.
Well, and that's where you can use those cutoff grades too. So how much of that 1 gram or 1 gram plus stuff gets pulled into the actual mine plan is the interesting part of it. Does it hang together? Where does it hang together? Where do we need to drill to actually bring stuff that's waste, where we know it might be high grade, into that into what would then be the mine plan? So it's an iterative and complex. We take what we've learned from our scoping studies of where those pits are, and we apply that over top of what we know from the geology and the modeling.
Let's zoom out one last time here on the corporate side. What's the cash position? What are things looking like on the corporate side?
Well, we're in good shape. We did that raise. We saved money last year. So we're sitting with around $18 million in the bank, which for us gets us a long way. That gets us through our 30,000 meters. It gets us our PEA, and it gets us 20 to 30,000 meters in 2026 for drilling, or through the winter, because some of the drilling we might want to do is through the winter. So that gives us lots of options. We're also getting some revenue from our rentals again. Remember last year we got $1.5 million from revenue, and we're expecting a little bit less than that, but it is also going to be significant to our balance sheet. So yeah, it's a pretty good position. We've got some great shareholders. We had a new shareholder that came in that last financing, who took a big position in Banyan, and that was above market with no warrants, which really is a vote of confidence for the company.
Oh, fantastic, Tara. You got to be careful not to having to rebrand as a hospitality company or so, and getting thrown into that bracket here. No, fantastic. Just run us through next top catalysts next 2-3 months here. What are you expecting? Drill results, I'm assuming.
Drill results, some more network results, and then leading up to our PEA. I think that's there'll be lots of news flow. We'll have to make a decision on when we cut off the drill results for the PEA, but I think it'll be lots of news, and really, we got a lot of tension from that last set of drill results with some of those higher grade. I think people are starting to think about, Banyan actually has some grade, and it's near surface, and they've got infrastructure. There's already hydro lines on the property, roads. That's all exceptional, and we're beside a couple other mines, and that's also good. There is lots of interest in this jurisdiction from some of the other projects.
Yeah, I can imagine. I remember you guys' project's probably the only one I had cell reception on during my site tours up in the Yukon. So infrastructure is definitely there. Tara, thank you so much for joining us. What a great update. Congrats again on the resource update. Really excited to see the 2.2 million ounces indicated. It's a fantastic result. And can't wait to catch up again when you have more drill results coming out. Higher grade drill results here as well, like 3.95 over 38. Let's see if you can replicate that. Really looking forward to seeing some more of those results. Thanks so much, Tara.
Guy.
Fantastic. Everybody else, thanks so much for tuning in here to the Gold Newsletter. I hope you enjoyed this breaking news update with Tara Christie. Let us know if you enjoyed it. Put it down in the comments below, leave a like, and of course, if you haven't done so, hit the subscribe button. It helps us reach a wider investor audience, and it helps us spread the message about the companies we're featuring here on the Gold Newsletter. Thanks so much for tuning in. We'll be back with lots more here on the Gold Newsletter channel. Take care out there.